In this video, we're going to answer this very important question. How do you know when to add to your entries versus just letting them go? Now, before we get to this, I do want to show just the thought process on Bitcoin, 15-minute time frame. We had this zone that I'm looking for a bounce. Price did come down here, started bouncing up, which was good. Then it started coming down. As it's coming down, we want to see it, kind of reverse here, decision point. The absolute lowest here to bounce to attack this level. Now the price did not reverse here, not decision point, started coming down, bounced in here, came up, broke this level, and then more than likely people started shorting, only to get liquidated when it came back up. Here was their chance to where now it could potentially come down again, break this level. Instead it came up, more than likely liquidating people, and then started reversing again. So now it's looking kind of better for a short. We have this trend line going. Now what we need to do is eventually break this level. Coming down, this is our chance for it to bounce here, to come up and break this level. And the overall thought process to go up. So we're not just flipping and flopping. Like the overall thought process to go up until we start breaking levels to the downside. Here is our level we need to break to go to the downside. Here's our other level. We pretty much created a zone here. So once it breaks out of this zone, chance of going short is better. Now, of course, our major level that we're looking for is this. This is what we're looking for. And that's because we're breaking this level, we're breaking this trend line. But just to go back up here, just to give you the whole thought process, price came down, then it came up. So it's breaking this level. So now it's like, okay, we did a higher low. This low is higher than this one. We broke out of this zone. Not only did we break out of this zone, but we tried to break this level and we couldn't. Came down, decision point, came up to attack this, to attack this. Now it looks good. Let's go long. And then what happens? Came all the way down below this level. We have probably people doing their stop losses right around here, which would be underneath this wick and underneath this. And what happens? Comes down just to liquidate people and now starting to go up. So right now, what I'm seeing is potentially it just going up and down, just flipping and flopping to liquidate both longs and shorts. So right now, in my opinion, it's dangerous to trade not only just, Bitcoin, but also the alts. Now, if we were to look at the bigger picture, we can start seeing this, again, 15-minute time frame. We can start seeing, we're starting to do this lower highs and then lower lows. And then, of course, if you go to a higher time frame, let's go ahead and hide all this stuff. Go to a high time frame, you can see this just a little bit easier, where price came all the way up here, came down, came up, came down, came up. Now it could come down here to come up. The main thing that we're looking at now, we need to break this level to be bullish. We need to break this level to be bearish. Anything in here, it can flip and flop and then create its own range. And then if you want, you can trade the range. But the main thing is it needs to break this for us to get bullish, about 119.9. It needs to break this to be bearish, 115.9. Now, with that being said, let's go ahead and answer the question. So just to kind of go over what the question was, we'll have more insight on pretty much adding to a losing position. It's kind of scary when you're adding to something that's not going the way you thought it was going to go. So to answer that question, let's go ahead and do a fib just so we can kind of have everything kind of looking the way we're thinking about. Let's say the price was down here and it's doing its number and it came all the way up to here. And then now it's starting to retrace and let's say we're bouncing. Now, if we're in a FOMO section of the market, then we're expecting 0.236. And for us to add to this, well, we know that 382 is what we prefer to have the minimum, and the absolute perfect, in my opinion, is the 0.5. This is where I would love for the price action to go, because this is a healthy retracement of the move. And now, as far as adding to our position, let's say we enter the trade here. Price goes up, then it comes down, but we're okay though, because, well, this is what we would like the minimum to be. Then it comes down even more. It looks like it's going to come up, goes to 0.5. We're still okay because this is what we would like it to go. This is the perfect, in my opinion. Now, we're also breaking highs, which is good. So this is saying, awesome. We entered here, started coming down, started coming up, did a small little pivot, came down, broke this level. We could add to our trade. However, it reverses on us. Comes down, and again, we're not freaking out because we see these levels. It comes up, comes down, now it breaks this level. Then we're looking at this one, since these levels are really close, we add here. So now we're fully in the trade. You know, we try to go in, we always scale into the trade. You know, it's safer. So here was our first, second, and third entry. We're in 100%. Then, you know, a week or two goes by, and it's looking great. It looks like it wants to go, but then it does this number, and it comes down here. Now it goes into the golden pocket. Now, for a lot of people, golden pocket is great. For me, I get a little nervous because what we could do is we could get rejected here, break the 618, which this is my danger zone once we ever come down here. Now I'm worried. So the question was, you know, when do you know when to pretty much like not add to your entry? Now, you have to have this as your plan initially, because if you don't have this as your plan initially, you could potentially just keep on adding and adding and adding. And one thing that we don't want to do is, you know, add to a trade that we're hoping that it reverses. Like, it has to be our plan. If it comes down to, you know, whether it's this level or this level, we're still good, because it could go here and still be bullish. But now, because it broke this level and also it broke out of the golden pocket, now I'm worried because, well, it could come down to the 786. That's what I always talk about. And then lose the momentum. Now, we don't see this until more time has passed. Now, for me personally, I like looking at this on the hourly time frame. Depending on what coin you're using or trading, depends on the time frame. And you kind of, the more times you trade it, the better you'll get at identifying what time frame works best for that coin. For me, for example, there are coins where I like trading on the 15-minute time frame versus a 4-hour time frame, just because the 15-minute usually plays out that, you know, maybe it's going down or up, and the 4-hour is the next one, then the daily. So this is what I like doing. Now, the trickiest part is knowing what time frame to go on. The lower the time frame, just to kind of simplify this, the lower the time frame, the higher the risk. The higher the risk, higher reward. The higher the time frame, the longer you have to wait, but the less chances you are of getting, faked out. Do you still get faked out? Yes. So there is no 100% way of which way to go. You know, should you go short time frame, long time frame? For the riskier traders, the people who like to nail the entry, well, they'll do that on a smaller time frame, 3-minute, 5-minute, 15-minute, knowing that they have a higher chance of getting stopped out. This can always reverse. All right, moving on. So would I add to my entry here because it broke this level and I'm just trying to save my trade? Would I add here? No, because more than likely the market's changing. More than likely this might come down, whatever coin this is, whether it's, Ethereum or just a random coin or even Bitcoin. It could come down. Let's say it was a regular coin. It could come down another 15, 20% in addition to what it went down here from our entry. So this to me would be an area where I would not add to my trade, because what it's doing, it's breaking the lows. If we come up here and let's say I didn't get stopped out and it starts coming up here, I'm still really not adding to my entry because I've already added 3 times. Could I get it down here at a much better price? Sure. But since the trend is just starting, I still have a chance of it faking me out again. Faking me out over here. So what I want to do now is I want to wait. I want to wait to see if I break another high. And all these are levels. This is our first level Okay, we broke above it. Nice. Coming up here, we come up, I would do this. Second level, you could enter, it's safer because we actually broke 2 levels. So here I would put in, let's say I had another $100 or 1,000 or whatever it is. I would put whatever the money is, the dollar amount is, I'm putting in half here. You know, I got paid again. It's been another month or 2 or what have you, depending on how long you're trying to hold this coin, or another week. Then it comes up, comes down. Now, of course, when it's going to do this because on this time frame, let's say this is a 15-minute, but on the 1 hour time frame, all it looks like is this. So this is why the different time frames matter, because here you can be adding to your entry or maybe, you know, closing out your trade depending on what the smaller time frame is doing, because it leads to the larger time frame. But when you look at the bigger picture on the 1 hour, you'll see that, oh, it came down, it came up, and then now it's, you know, coming down. And here, you know, we could have entered, or if you just want to wait, you can enter here. Now, there will be times where we will be entering here or even here, but right now is not that time. There's a lot of traders I see out there that are, you know, they're buying the retest. But to me, this is extremely dangerous because what could happen is it just rolls over. And then now what? So here, at least it's showing you strength. There will be a time where everything is really nice. We could, you know, have our entries here. We could even put lower entries to where we enter here. We set it, forget it. We go out, we do whatever. But we also have lower bids or entries that have not been filled here, here, maybe even here. And we just go about our day. Because if we get a dump really quick, there's a really high chance that it'll go up. Now, it's really different right now in this current market to where, you know, we're getting all these fake outs. So would I buy the retest here? Not really. You know, if I thought that the overall trend on the larger picture, this is the 1 hour, let's say on the daily or the 4 hour, to where it looks very bullish. There's a lot of bearish signs, whether you use divergence or patterns or whatever you use. If I see that this is, you know, looking pretty healthy, and I wanted to increase my risk, you know, on the 1 hour time frame, I see this coming up. Sure, I might add, or I might enter here to see if it does break this. But once it breaks this, definitely adding to my entry. Now, when it comes to, you know, when do you not add to your entry? Well, that's when this starts happening. We start doing lower lows, and it's going below where we would like it to go. Now, if you don't have a stop loss, once again, there's several different ways of trading. If you do not have a stop loss, just be aware that your entire amount that you're trading with could be liquidated. And let's say you did $50 here, then you did another $75 here, then you did another 100 here, and now it starts coming down. And because it's coming down, you're adding 100 here, and it's really not moving your average entry. And then you do 200 down here, and you're like, oh crap, my liquidation is right here. You know, can I add more to my trade, or just see if it hits zero? You know, see if I get liquidated. That is not a plan that I want. Then now when everything is really crazy bullish, you know, I'll be doing that to where, you know, I'll put $25, $50, $100, 200, because there's a really good chance, because of the segment of the market we're in, there's a really good chance it's going to go up. I just need it to go up. I just need to give it a little bit more time, a little bit more cushion before it goes up. Now, the problem is every time it's going lower and lower and lower, I'm adding to it. So it reduces, and I'm adding more. I started with 25. Way down here, I'm adding 200. The only problem is the chance of you losing or running out of money continues to increase the lower it gets and the more you put in. Let's say you had a $5,000 account and you're doing this on 3 or 4 trades. The market's turning, and, you know, these are pulling back 20, 30%. You know, do you have enough money to cover it? If not, you know, your $10,000 total account, because you got liquidated on some of them, now became a $2,000 account. And it's much difficult. There's more difficulty making $1,000 when you only have 1,000 versus making $1,000 when you have 20,000 or 50,000. Making $1,000 is easy. Also losing it. So that's why we talk about risk management like a lot in the group. So to answer the question in reference to, when do you not add to the trade? Well, when it starts going against you, when it starts becoming invalid. Here's another great example for something that's invalid. Let's say you do patterns and we have an inverse head and shoulders, or if you trade the way I do, it's just this level. But you see this and you're like, awesome. It comes up here, you enter the trade, it comes up, comes down, it's going exactly the way you like it. But if we were to do a fib pull from here to, let's say it rolls over to here, on average, what we would like to see is it come down in here. 50% would be here. Golden pocket would be here. And let's say, it starts coming down, you're fine because you're still above this trend line. Once you break below this trend line, now we start getting worried. It broke below it. Oh, crap. So this pattern is now invalid. So we don't look at this pattern anymore. We can still use this trend line, but we don't use this pattern. How did this pattern become invalid? Price went below the neckline. It's not supposed to. When we have this pattern, it's supposed to go up with the measured move, and it didn't. And now we can see, we have a head and shoulders. And you're like, okay, well, more than likely it's going to come down to here. But let's see here. Now we have the golden pocket right here, and it starts coming up. Okay, you're pretty much safe. Starts going up. And now this pattern, this head and shoulders, became invalid because the target's way down here. So now this pattern is now invalid. This is why I don't like trade patterns. I do levels. Then, we're expecting it to go up, and then it does this and starts doing this falling wedge, maybe the beginning of a bull flag, but then we start doing like a channel. So now it's a falling channel, and now it's going against you, because now what it needs to start doing is breaking the highs in order for your trade to go well. Now, would I add to this trade? Depends on what segment of the market is, and depends on my plan. If my plan was to have a stop loss, my stop loss would be more than likely just underneath the 786. Just in case it comes down to the 0.5, which is good. If it goes into the golden pocket, it's okay. I get a little nervous, but hopefully it bounces here. And then my 786 is right here. Here's my stop loss. Hopefully I don't get whipped out, but I'm not adding to my trade until I start seeing it make higher highs. So let's go over here and let's just say all this is right here. Let's move this over. And, we came down, we broke the level. Here's our area that we're looking at. That's all this right here. And then now it starts coming up and it starts doing this. Here's my level 1. Here's my level 2. On level 2, I can add, because there's hopefully a higher chance that we start doing this and now start going up. But one thing we do not want to do is continue to add to losing trades, especially if it is not the plan, because we could get liquidated. So that's my thought process when it comes to this question that we had, more insight, adding to losing positions. Losing positions is fine to add to. It's just, you have to have a plan when you're doing it. You do not want to just continue to add to it. And because what could happen, the market could be changing. And if you keep on adding and adding and adding for several days, if not weeks, if not months, do you have that much money? I don't. Just take the loss. And it hurts too. I've done it. It hurts a lot. For me, it feels scary to add something that is turning, that goes against my thought process. Yeah, same here. So your thought process, it has to include where you might see it come down to. Now, and that's another thing too, like when I'm posting these charts, you know, let's just say a coin did like something like this and really nice run up. And it, because it broke this level, we see it. And of course it broke this level, we see this. We enter our trade here expecting that the price might pull back to here. Because of this, if we use a fib retracement, you know, from here to way up here, we're expecting the price to come down minimum, depending on what phase we're in. You know, if we're in just crazy banana zone, banana, whatever you call it, and everything just going crazy, we expect it to pull back to here, minimum. But it could pull back to here, which is the bare minimum that I would like to see at this current moment. And I love it when it goes to 0.5. I love it. So this is my plan when we're doing this, you know, and whenever we're doing the actual setup, I say enter now, and the price, it might pull back to here to come up, do a lower high, which is fine, come up and here. So this is my plan to where if it does pull back, I'm expecting it, and it's okay if it does, because I'm looking for a bounce either here, maybe even in the golden pocket, before it starts going up. And then now I can start adding to my trade. And it's always safer to add to your trade on the break of a level. However, you could enter on a bounce because this is on the, let's say this is a 15-minute time frame. Then you bring it down to a 3-minute time frame, and here you might see something like this on the 3-minute. And this is what you would do right here. And again, it's just depending on how much risk you want to take. The lower the time frame, higher risk. Higher time frame, lower the risk, but it can still go against you. You know, there's nothing that's 100%. But this is what I would do when it comes to, you know, entering lower. You know, this is my plan where I think it might come down, and if it does, great. Now, could you be entering on the lows and not here? Yes. The only problem is, let's say you personally think the price will come down, and this is where your entry is going to be. You don't want to enter right now. You want to enter down here, which is fine. The only problem with that is that we don't know 100% sure if it's going to come down. You could have bearish divergence, but that bearish divergence could take you only to here. You could have, you know, it going on the 200 SMA, whatever time frame you're looking at. It could be just everything like looks bearish. But we're trading with people, so what people could do is they could see this thing, and maybe there's a pump group. It did pull back a little bit, and then it continues going up. So what I like to do is, personally, I like to be in the game. I'll enter the trade, and then if it pulls back, which is great, I'll add to the trade. So hopefully this video helped. If it did, please let me know in the comments. I do thank you very much. If you have any questions, let me know. Thank you so much. Of course, on the VIP chat. And I thank you so much, guys. Talk to you soon. Take care.